Stephen Johnson stacks. Green week this week, solid week, good lessons, but I just want to tell you a quick story. So I went out for like one drink last night, market was a bit quiet, turned into a 3 o'clock in the morning thing. So I'm going to push through this and my voice is a little bit gone. But the funny story is, I was in a bar with my friend and I met a Scottish girl. And I was like, Scotland! I was like, let me try my Scottish accent out with you because I'm from Newcastle and I'm close to Scotland. And she said, go on then. And I went, so I was just like, get in my belly! I'm dead sexy! And she just looked at us and said, you're quoting Austin Powers. And just turned away. And I was like, so a massive, massive learning month. Green week, I'll have to check. I think I'm up about $50. Not a lot, but comparing the fact that people out there are losing 5, 6K a day. Some traders on the long side are losing 6K a day because they're just not adapting to the market environment. And there's 2 valuable lessons that I've picked up. I mean, one, there's a reason that there's a Sykes sliding scale and that trader checklist was invented by Tim Sykes. And because the E, if prepare, is market environment. And the market environment is not so strong for longs now. So I am very cautious with the trades that I'm making. And that's how I've got this green week. And when the market environment's a bit better, then you can be more aggressive again. But for now, it's best to only take the best setups. And that's why I've only took 3 trades this week. 2 green, 1 red. And the other thing is, you don't have to trade that often. The Tim Grattani video interview, it was just published last night, is gold. It is gold. Like, watch it the whole hour and watch it again and again and again and again. Because the journey is not easy. And my journey has not been easy. But, I mean, do I think I can be Tim Sykes' next millionaire student? I've been 10 months into this whole experience. Yes, of course, because I understand that it's just a process of learning. You get better, you fuck up, you make mistakes. It's not hard, but you get by. And then before you know it, you're green, and then you make 10 grand, then 20 grand. Like Tim Grattani made his first money buying promos, and then he adapted and got better. And I want to show you the one pattern that I think really is going to work for me and make me money, because the U-shaped break and the ascending triangle isn't so strong, but this one is. So I'll just quickly go through the Excel, show you this pattern, and then we will go into the trades. Okay, let's first get through some tweets. So Hamza Sana, today I discovered your YouTube channel and I am very pleased to hear that you are in Dubai. I am also in Dubai. I'm planning to start trading and currently learning. Well, Wallah Habibi Hamza, Kifak, how you doing? Good luck on the road, brother. Stick with Tim, watch Trader Checklist, it's free. It's a free guide and it's a brilliant introduction. Billy the T-Rex, live the dream, homie. That intro editing must have taken forever. Really didn't. It was the intro thing from the Live the Dream video. It was a two second thing. I just speeded up the frame. Kiko, no problem. I'm not trying to sound like a dick. When anyone says I'm not trying to sound like a dick, they're being a dick. But I'm going to tell you what you need to hear. You said you've learned a lot from your mistakes, but I strongly disagree. I see your Excel and you're not going anywhere. You are taking comfort in thinking that you're learning from your mistakes, but you're not. Trust me when I tell you, you will stay in this black hole forever until you either quit or seriously change what you do. Well, Kiko, just last month I was green, just losing because of commissions. And this week I'm green, baby. This week I'm green. So I don't know how valid what you is saying is. Dan Adlington, what is really good about what you're doing is you're learning from your experiences, not like what Kiko said. All the interviews I have read and heard about by the big name traders say they went through what you're going through. I think the experiences are important because they burn into you the fear of making a losing trade. You can see why Tim Sykes trades the way he does. I know from my own experiences trading, it is definitely not for the faint-hearted. It takes courage. You are my hero, Stephen Johnson. Dan Adlington, that is one of the best comments I've ever received. Thank you so much. Let's get on to the trades. Okay, and I mean, you guys might think I'm a bit crazy saying this, but honestly, in terms of the profit loss, I mean, green week, if I can have another green week next week, it will be the first time I've ever had back-to-back green weeks. So I'm really, really excited about going into the new month. And although I lost the $700, in reality, I lost the $700 in 2 trades being stupid. One was plug and one was IMNP. And I've learned from them to cut the losses immediately. And that was literally the 700 loss. Everything else was pretty much break even, 36% winning trades. I really need to push back into the 40s, but I think I can do that learning the lessons of trading less, only trading the best setups. A couple of things to show you guys. I mean, in terms of the trades, winning more than losing, cutting losses much quicker now, which is awesome, and winning more trades. And it's just the odd blowout that if I really cut my losses, then I think I can definitely be profitable. And just one other thing to show you, I'm tracking the first green day a lot now, so I'm just saying basically the chart ticker, after it had its first green day, after a lot of consecutive red days in a row on a very volatile stock, did it have a second green day? What did it open at on the first day it had a green day? What did it close at? Did it close by its highs? How big was the green day? What was the high of the next day? What's that percentage? What did it close at the next day? And I'm finding some interesting results, and I'll show you a chart of what I mean. But this first green day, I mean, it's so much easier for me than trying to buy the breakouts or trying to buy the ascending triangle intraday breakout or trying to buy the U-shaped breakout, because you've got, for the breakout, you've obviously got resistance, you've obviously got uncertainty whether it's going to break out or not, and you never quite know if it's going to follow through, and you think, well, and if it doesn't follow through, everyone gets out immediately and there's like panic selling. So breakouts are a bit more tricky, especially in this kind of market where we've seen a kind of a lack of momentum follow through. But on the flip side, first green day is when a stock is way overextended. So it's had this huge run from literally the 80 cents up until $3.50. So it's like tripled its size. This is an example of NEDL. And then shorts pile in because they know this stock is up 3 times its value and it was 80 cents and they know it's going to go down. So if you're a great short, you'll hit the top, you'll follow it down. And this is when I watch it. I'm tracking stocks that have made big moves. So in advance, I see them come down, come down, come down. And then after a certain point, shorts will think, right, I'm going to take my profits. I'm going to book my profits. It's people might start to cover, and then you get this reaction. So because when you're short, you're buying the cover, you're buying back in, you're buying the stock, and then once it pushes a little bit, you'll get momentum buyers like me buying the first green day. You'll get shorts panicking, thinking I need to cover it. And what ends up happening is it'll have these short squeezes. So it'll squeeze up here, and it held, and then it had this massive squeeze up here. So instead of me pushing for a breakout buy of trying to scalp 15 cents and then maybe it doesn't work, what I would prefer to do is try and take the meat of the move on something like this, where you're waiting for it to squeeze, and then boom, as soon as it stops downtrending, you've got this move from the 170s back to the 3s. And this is purely short panic covering and momentum buyers. And you just need, if you do the extra work of tracking these stocks long term and waiting for them, you can catch this huge move. And I mean, it had its first kind of, it was moving it towards a green day here, but then it's a first small green day here, and then it had this huge follow through. So you can buy any time here. You think, NADL, first green day, I'll watch it tomorrow. And then you can buy anywhere as soon as it breaks the pre-market highs. 211 up to 3. That's $1 a share. That's a 30% move instead of scalping 5%, 3% on a breakout. And we can see the same thing with CMBX. It's completely overextended. Comes down, comes down, comes down, and then you just wait. First green day, gaps up. Buy it when it breaks out of this consolidation here on the 290s. You've got the $3 break. Boom, you've got a 70 cents a share. It's insane. HTGM. Same thing, makes a massive run up. This is a little bit more tricky. Comes down, shorts, come down, come down, come down. But then on the 30th, you can see here, the stock's gapping up a little bit. It has a bit of a weak open, but as soon as it breaks this kind of consolidation, or if you want to buy this consolidation mark here, and it's the whole dollar break on 7, you can buy in at 7, and you've got to run up to 775. And then it's the next day it's running up to the 8s, and then if you don't want to buy that, watch it fall a little bit more, and then it has its next big green day, and this time it breaks the pre-market highs and goes from the 560s to the 8s. It nearly doubles, and it's just shorts getting squeezed. So valuable lesson. MVIS. Okay, so MVIS, I was buying on this day on the 24th, and it's had a contract win. It's on 52-week highs. It's a multi-year breakout, and this is the importance of looking back at charts. So I'll show you, it looks brilliant on, let's say, a 6-month chart. It's a multi-month breakout. Check it out. It's pushing the 3s. It's just had a big contract win. But if you go back maybe 3 years, 2 years, we can see that it's got huge resistance here in the threes. So it kind of topped here at 3, and then crashed. And then it kind of, yeah, so it's really coming into its resistance point, and then after that it's got resistance kind of in the 320s. So it doesn't look like this stock can go much further. But if it did break the threes, I mean, it could have gone to the 4s. But I played it safe, sold into major resistance, and took the profits. So I can basically just show you on the, maybe on a 5-day chart. Let's take a look. Yeah. I mean, it was a super strong chart. I mean, it uptrended all day. We can go to 2 minutes. Yeah, we can see the margins here. Uptrended all day, standing triangle, failed break. This is why I tend not to play them as much. But it came back and it had a solid, if I just show you maybe like this, solid uptrend all day. So I was thinking, fuck it, I'll buy in. And I was in the 85s, I think. I can just check. I was in around 284, 285, buying into the close, and it gapped. And I sold 302. So I took like maybe 20 cents a share. And I was pleased with that. And then it panicked out in the morning because it's got all that resistance in the threes. It couldn't break it. And if you'd have held, I mean, you would have lost maybe 10 cents if you'd have held it. So it's not a massive loss, but I mean, I played it safe, booked the profits, and it worked out. I'm dead sexy. So this is Z-Pass, and it's very much like EMMD. And if you haven't seen it, go watch Tim Sykes' video lessons because he talks about it again and again and again. But it's basically, on these pump charts, they have panics because stop losses go off. When people are probably at work during the day and they're holding this huge run-up. But it creates a buying opportunity when these stop losses go off. So when I saw it had this big panic here, and the promoters obviously saved it from the went down to the 180s, they saved it, brought it back up to the 250s because they don't want to get investigated for fraud. I thought this can happen again. And I basically set a stop loss. It was on the 27th on this day. I'll just take you to a 2-minute chart. And I saw it gradually increasing like it always does. And I just clicked, add an alert, last price, if it goes over or under 290. And then I get, and now he's saying it's going to go off. I think, Z-Pass is doing its usual daily panic. I got in the 273s, I was out in the 285s, I could have held it up until the 3s, but it's my first time kind of doing this, so I didn't want to. But it's just an easy opportunity, and it will happen again and again and again and again and again, and if it doesn't bounce, just get out straight away. But you can do this again and again and again and again. I mean, it's happened with AMMD, it happened with Z-Pass, it's happened with a few other tickers that I can't remember off the top of my head. It's just a ridiculous opportunity. Okay guys, hope you guys enjoyed it. Not so funny, but very important lessons. And if you want me to do more stuff like this, then comment first green a day. Because it's true, like, yeah, the guy's lost. He's lost money. But the fact is, science and data doesn't fucking lie. And it's just a good observation. And it's, for me, the most profitable chart pattern in the market right now, in my opinion. That works, and they're proving that it can. So write first green day if you enjoyed it and you want to see more stuff like that. Basically, research backed by data. And other than that, I'll see y'all later.
I'll see y'all later. I'll see y'all later. It's bedtime. I'll see y'all later. Just...